Hey guys, what is up? Welcome back to RWM Finance. Today we're going to be talking about what a dip is, what a recession is, and what a depression is. So in a prior video, I discussed 4 recession-proof industries. These are industries that would do well in just about every situation. So if you want to learn more about those, that video should be popping up right about now. So go ahead and check that out. That video got me thinking, I wonder if y'all know what a recession is. So if you do not, then don't feel bad, because that's why you're watching this video, which is to learn, okay? Which I'm very proud of y'all for trying to continue to educate yourself. That's awesome, that's great, keep doing it. Now, if you haven't subscribed, scroll down, click that subscribe button for me, and let's get to what a dip, what a recession, and what a depression is. So first up, we're going to go over what a dip in the market is. Majority of people know that whenever you're investing, you're supposed to buy low and then sell high. If you know this, then you may have heard the phrase buy in the dips. This phrase simply refers to buying an asset whenever its price declines. So a dip is basically whenever the stock price falls. The concept of buy at the dips is based on the theory of price waves, which is when investors purchase assets after they have experienced a drop in price. They are now buying the assets at a price which is lower than what they were at. The reason for this is because they are counting on the market to rebound and the prices to go back up. This way, the investor will profit whenever the prices do rise back up. So a dip in the market is not necessarily a bad thing at all. For many investors, it is the perfect time to start investing in those companies that were trading above their intrinsic value. Now, let's move on to what a recession is. So a recession is a macroeconomic term that refers to a significant decline in general economic activity in a designated region. Typically, it is recognized as 2 consecutive quarters of economic decline and monthly indicators of a rise in unemployment. But the National Bureau of Economic Research, or the NBER, defines a recession as a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. So some key takeaways are: a recession is a period of declining economic performance across an entire economy that lasts for several months. Businesses, investors, and government officials track various economic indicators that can help predict or confirm the onset of recessions, but they are officially declared by the NBER. Now, let's dive into what a depression is. So most of you have heard of the Great Depression. The Great Depression lasted from August 1929 to March 1933, so a little over 40 months. Now, a depression is a severe and prolonged downturn in economic activity. In economics, a depression is defined as a severe recession that lasts longer than 3 years, or which leads in a decline of gross domestic product, or GDP, of at least 10% in a given year. Depressions are relatively less frequent than milder recessions, and they tend to be accompanied by high unemployment and low inflation. So here's some key takeaways about a depression. A depression is characterized as a dramatic downturn in economic activity in conjunction with a sharp fall in growth, unemployment, and production. Depressions are often identified as recessions that last 3 years or longer, or result in an annual drop of GDP by 10%. The U.S. economy has experienced several recessions, but only a handful of depressions. Now, you may be wondering how often these 3 things occur. Now, dips in the market occur around about 1 to every 3 years. This is if you consider a dip to be when stocks lose money for the year, but about roughly half the time the loss will only be about 10%. Now, recessions in the market occur about every 4 to 5 years. Since 1900, the U.S. stock market has averaged a recession about every 4 years. Now, this does not mean that they happen exactly like clockwork. That number is just an average. But it is nice to have an estimate just to keep that in the back of your mind. Now, I have to say that after doing some research on depressions and trying to figure out how often they occur, I have been unable to find a real specific number. This is due to the lack of agreement on what the definition of a depression is and the lack of the actual usage of the word. Most of the numbers I find are related to recessions, but just so I don't leave y'all empty-handed, I wanted to find some numbers that I could give y'all. And the numbers that I did find are depressions occur from around every 4 to 10 years. But drops in the market of about 30% occur about every decade. So if that's what you're considering a depression to be, then about every decade would be the number that you're looking for. But a 20% drop in the market occurs about every 5 years, and a 10% drop in the market occurs about every year. So those are some numbers that you can also keep in your mind, all right? So don't hold those to me. I'm just trying to present y'all with some information. I'm just going off what I could find. It might not be right, but hey, I mean, they're just averages and some numbers, so at least y'all have some numbers that y'all can kind of keep in your head, just so you have that in the back of your mind. So I hope this video allowed y'all to better understand what a dip, what a recession, and what a depression is in the stock market. Well guys, I hope you enjoyed the video. If you did, scroll down, give it a like, and subscribe to the channel below. If you have any comments, questions, please leave those down in the comment section, and I will personally try and respond to each and every one of them. Follow us on Instagram at RWM Finance. Make sure to check out the list of books in the description bar below. I added a couple new ones. I actually added an audio book of Rich Dad Poor Dad, so for those of y'all that don't like to read but you want to listen, check that out. Make sure to tune back in. You know, I post videos every Monday, Wednesday, and Friday, so tune back in for the next one. As always, thank y'all for watching, and I will see y'all in the next video.